All right, so there's just a few things I want to speak to you on the S&P here. We're going to start off on the 4-hour chart, and the reason I'm showing you this is because, I've been talking to you about a 335 correctional pattern here. As you can see, either a 335 or this is a 535, and we're about to finish the C wave here. So the C wave should develop in 5 waves. For now, we have 1, 2, 3, and it looks like we're getting 4. Now, I still do believe that there is a little bit of upside potentially on both SPX and NASDAQ. The reason for that being, if we go on the 1-hour charts, we can see that, we got maybe 1, 2, maybe this is A, B, C. Maybe we get 1, 2, 3, 4, 5. We can go a little bit higher. But NASDAQ has reached the 50% retracement of this last move, from up here, so of our third wave. And S&P is right around the 38.2. I do think that these are levels where we could turn to go down and form one more new low to really capitulate everybody out. After Friday's price action, a lot of people have already turned bullish. They're calling for a bottom. And if we were to go back down and break the lows from was last week or whatever, everybody is going to turn bearish. And that is the moment where we will be looking for a bottom. So we're going to be watching this very closely. If I just show you this on the 4-hour chart with a line chart here, as you can see, we can see it very clearly. Once again, we have the 1, 2, 3, and then it looks like right now NASDAQ has gotten a zigzag correction here for the fourth wave. So 4, and then that we can expect 5 coming here next week. If I go over on SPX, it's kind of the same situation where SPX here has a 1, 2, 3, 4, 5. And then we came here and we got A, B, C, and now we're getting 1, 2, 3, 4, 5. So that is my bullish scenario here, that we go a little bit higher to the highs 43.38 here on SPX. NASDAQ, I'm not too sure where we could go, but anywhere below 15,254, maybe around that 15,050 area, we'll be looking at that very clearly. We also have a bearish divergence on the 1-hour chart forming with the highs from the top of the move here on SPX. So if I just go and show you this really quickly, if I go onto the 1-hour chart, let me just pull up my trusty little MACD here for you. So as you can see, I said the lows from to the top of the move. So oftentimes whenever you see a move start, I will look at the beginning of the move and look at what kind of divergences we can get with that level. So the very top of the move was up here, and then the top of the third wave is right up here. And what are we getting? For now, we are getting a bearish divergence with the top of the third wave. So as you can see, this is the market right here in black, and then this is these are the highs. So they are diverging. The MACD is moving to a higher high. The market is making a lower high. That is a bearish divergence. Now that tells me that we could come down here and form either a 3 drives pattern on S&P, which would give us, if we actually turn right off of this level, that would give us a nice little broadening formation before we bottom here and go up for a big rally that I think would take us up to all-time highs. But we do have to see if we bottom or what happens. I did want to speak to you about a little bit of trading psychology now. Excuse me. If you haven't read the book Reminiscences of a Stock Operator, it is the story of Jesse Livermore, and it's just so interesting because he gives us a ton of insight on how markets work. Now, one thing he says in this book is, a lot of people, a lot of these big institutions, a lot of these big players in the game, they trade and they swing a huge line. So they have a ton of shares that they have to get rid of. And the best way for them to do that is, for example, on a day like Friday. So in max fear, max panic, that is when people tend to cover. And that's what we saw here on Friday. We gapped down about 1.25%. It was very, very steep here. Let's just go back and see. So as you can see on this hourly candle, we went down 1.3%. That's a lot. So within this little capitulation move here, they said, all right, I'm going to cover all of my shorts here. So they covered their positions and whatnot. But, I do believe that they are trying to accumulate a little bit more. They have been accumulating within this range here since, since September, end of September. And I do think that they might, push this down to an even lower level here on the US 100 to really get as much as they can. let's see, if I just try to draw a little channel on this here, these are now our channels on US 100 for this move down. So as you can see, boom, 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 something like that. There we go. So not perfect, but you get the gist of it. I do think that we're going to break this level. You can see it a lot clearer on the NASDAQ here. So as I said in the book, they like to cover it max panic. As you can see here, we gapped down. Everybody thought it was going to go even lower. What did I tell you? I told you if we don't break the bear flag, I persistently sent out a tweet saying if we do not break out the bear flag, be watching for the upper boundary of the bear flag. And I'm not lying to you. I'm about to show you all of this. So as you can see, where did we go to? Exactly the upper boundary. Does this mean that we turn from here? Possibly. It does look like a complete move to me here, a complete corrective move. But it's not a given yet. We do have to see what happens. I do think that we can open a little bit lower or whatnot and then come back up here and, you know, put in a little top surrounding the 200 period moving average here on the hourly time frame for NASDAQ. For the S&P, I think we're going to turn around these levels. Not sure exactly where. If we do rally, we'll be looking at gap resistance. That is going to be the next level of resistance. And then we would see if we would crash down back to this lower trend line or whatnot. But for now, it does not look like the bottom has been put in for now, to me. I could be wrong, but once again, I need more evidence to be able to say that whatever happened Friday here, or I mean last week, has really put in the bottom. And on NASDAQ, the week before. I just want to go over to my Twitter. Make sure you follow us. You follow me out here on Twitter. I post real-time updates, and I have been completely spot on for the time being with my calls. You know, I called right here. I called a rally, like literally right off of the bottom right there. I called a rally right here. I called a sell. I told you that we would be going to gap resistance, and we did just that. We came up to gap resistance, and then we sold off. We dropped back below the 50 period moving average. And I do have some very interesting things to show you surrounding the 50 period moving average. And then we came back down, and look at this right here. I told you. Where is it? Right here, I told you as predicted. NASDAQ and S&P turn off their 50s. As you can see right here, we had a big gap down with the jobs report back under the 50. And I told you, look at this. If we fail to break the bear flag on NASDAQ, I'm looking at the upper boundary of the bear flag and the 20-day simple moving average. Come on now. Look at this. We failed to break the lower boundary. If I go back on the NASDAQ chart, we did fail to break it. We turned around. And where did we go to? We went right up to our upper boundary here that I had drawn out. So, you know, the move was very, very powerful. We're talking about only like 3.5% from top to bottom, or bottom to top. But, you know, that's how they trap you in. They make you think that this thing is just going to keep going before turning it around. Could it just keep going right now? Absolutely. But right now it's looking like futures is trying to sell off a little bit. We are watching to see what happens surrounding this level. If I just look at this like this, I can tell you that this is some sort of tiny little level of resistance on the short term. I do think that there is a strong possibility that we fill this gap here, you know, maybe at the open or something, come hover around these levels. I do have a little box of supply sitting right above us. So we will be watching if we get, you know, if we go tag this. I do not think that we will move above 15,118. If we do that, it does invalidate the 1, 2, 3, 4, 5 here. It just tells us that this was probably a C wave, you know, I mean, A, B, C, and that it's now over. But we can't tell for sure. So we are still watching to see. Now, one thing I really want to get into, and this is big. So I've been talking to you a lot about the 50 period moving average, and there's a good reason for that. Usually in a downtrend, you find rejection surrounding the 50 period moving average. And I know you might be saying, oh, we broke above it. You know, there's no way we're going to get back. No, listen, right now, we're currently sitting about 1.5% away from the 50 period moving average here on the hourly time frame. That is nothing, guys. And I'm about to prove that to you right now by showing you a little bit of history. So if I just go back to Monday, March 6th. So let's go back. Monday, March 6th. Where was that? Right. Is it here? No. Is it here? Okay. This is Monday, March 6th. So right before a major bottom here, what happened on Monday, March 6th? We had a little bit of inversion here with the 50. We were very far from the 50. And right here, before dropping back below the 50, we were 3% almost 3.3%. We actually were 3.3% away from the 50-period moving average in the hourly time frame before crashing back down over the next what was that? Over the next 6 days or so, we crashed back down, formed a new low. This created complete capitulation. Everybody was calling for a huge crash to start, and this is what they do. I'm telling you, when we really only went down about 1% under the previous low, they rallied it up and made it seem like a much more dramatic sell-off of 6.22% here. And I think that we could get something extremely similar on the NASDAQ and on S&P right here at these levels. As you can see, we're 1.5% away. If we were to crash back down to this bottom box here and this bottom trend line, as I've been talking about for quite a while now, that is about 5 to 5.5% crash, depending on when we hit it. And if you're actually taking it from the top here, if I take it from the top, yeah, it's about 5.5%. So that's just one example. You think that's just a fluke? All right, let's go back. Tuesday, January 3rd, 1.66% from the 50-period moving average before moving higher. So January 3rd, right here at the very, very bottom of the market, it is this move that I'm showing you. You can see this little thing right here. Man, we were about 1.66% away from the 50-period moving average. Let's go to another one. So we've had Monday, March 6th, Tuesday, January 3rd, Tuesday, October 4th, 2022 now. Tuesday, October 4th. Let's go back to October. Where is October? All right, right here. In October of 2022, after our little 5-wave push lower here, we managed to come, October 4th. Oh no, it's right here within the move down. So real quick, I know right now we're not getting a move down, but within moves down, you do want to be watching this 50-period moving average very, very closely, because in my opinion, it tells you where the tops and the bottoms are. Right here, as you can see, I find that usually in a 5-leg push lower or push higher, we do tend to go back to the 50 or get back above it here in the hourly time frame about, twice before we get the real break. So as you can see here, we got wave 1, we got back above it here for wave 2, then we got wave 3. We only got back above the 50 here for wave 4 as we went sideways, and then wave 5. And these rallies are massive. These rallies trap people. These rallies get you thinking that everything is over. So let's just go. So, okay, my next one was Tuesday, October 4th. And something that I did note while I was doing this, it always seems to be on Monday and Tuesday that we get these little peaks above the 50 before crashing back down. I mean, I'm just saying. So this past one was on Tuesday, October 4th. So let's just go to October 4th right here. Boom. Right at the top. How far were we from the 50-period moving average here? About 2.98% whenever I measured it. As you can see there. But right here, this is 2.98%. And people probably didn't think that we were going to go down and make new lows right at this candle. Right at the close on Tuesday. I don't think they thought so. At the open, I think they're a little bit more open to it. We opened down 2.15%, rallied all the way back up. I don't think, at the peak right here, at this moment, I don't think anybody thought we were about to make new lows. But we did. We crashed down. We went 1, 2, 3, 4, 5, and put the bottom in for the market. So, right now we're currently, about 1.6% from our 50. So once again, it's not a situation where we're completely bullish. I'm telling you, the bottom has not been confirmed yet to me, and I'm just showing you these examples to show you how far we can get from the 50 before going back below it and really putting in a bottom. And the last example I have, and I could go on and show you a ton of examples about this, but I'm just going to show you. I got 1, 2, 3, 4 for you right now. The next one is Monday, September 12th, and we were 3.94% away from the 50 before crashing back down and making new lows. So Monday, September 12th. Let's see. Where is that? Right about here. Okay, yeah, so this is the one I had. I'm sorry about that. This is the one I had, and I did already show it to you. So right here within this, I don't know if you remember this was a flat correction. We had 1, 2, 3, 4, 5, and then we came back here and got A, B, C in a flat correction as we went right a little bit below the peak of wave 5 here. We got this little ABC, and it took us, we were 3.94% away from the 50-period moving average. Isn't that something? And we still crashed to new lows extremely quickly too. So, it doesn't mean we're out of the woods right now with the rally that we have had. Could the bottom be in? Absolutely, I am open to that happening, but I do still believe that we're looking towards this little box that I have drawn, which is like, if we break it, we'll be in no man's land until 13,912. So I think that is really going to scare a lot of people. Now, something else I want to show you. Watch this. Let me just get rid of this MACD. If I pull up a moving average. Okay, before I pull up a moving average, let me just show you this. So on the 1 hour, if we start moving lower on NASDAQ, there's no support. I mean, it just looks like there is no support under us. We're below the 200 on the 4-hour time frame. The daily time frame, we're below the 50, the 10, the 20. Well, we got back above the 10 and the 20, but I am looking for a top a very short-term top surrounding this high, surrounding the 20-period moving average, for us to crash back down here. And as you can see, the 200 is very far. Right now, the 200 is at 13,646, and if we start coming back down, I'm pretty sure a lot of people are going to be looking at the 200, but I don't think that we're going to tag it. The reason for that is, let me just pull up SPX. SPX is at its 200 already. It could come a little bit under, form a 3 drives to a low, to a bottom pattern, whatever. But it does have major support sitting right under it. If I go on the weekly time frame, you can see SPX has the 50-week moving average sitting right under it, right there at 41.61. On the NASDAQ, there is no 50-week. The 50 is at 13,338. And, that's a huge drop to get there. And that is not where we're going. So where could we bounce off of if, we are the NASDAQ right now? Boom, you have to go to the monthly time frame. We do have the 10-month moving average sitting right around 14,100 here. Big level to be watching is, and not many people watch these monthly moving averages, but I found that usually whenever you break every single other moving average and there's a huge gap, you really want to be watching those weekly and those monthly moving averages. Whenever you get to them, they give you multi-week bottoms, if not multi-month bottoms. So if I just go ahead and pull up the 10-month moving average on NASDAQ, we already told you that the S&P had the 50-week. So let me just pull out the 10-month. Boom. I go in here. I put in 10 so I can get on any chart. I go down here in time frame and I select 1 month for those who don't know. And boom, this is our 10-month moving average. It curls up like this often, but it's not really doing that. It's just kind of staying steady. So right here, if we look, take a little bit of a step back, we have our level of support right below us right there at 14,100, about 14,100. Apparently it is curling up that much. So, we're watching to see. Here we go. I got it on a straight line. So yeah, 14,107. That is the area we're looking for right below this trend line. Would create complete capitulation. We did start getting, we did have our spikes in the PCC and the PCCE that we were looking for. That's why we did get a first short squeeze here, as I predicted. But we're now looking for, one last dump. One more round of people buying a ton of puts before they really squeeze them out to I believe, all-time highs here. So, once again, that is something that we are definitely looking at. You can go ahead and look at stocks above their 20 and 50-day moving averages. We are reaching extremes on those as well. Let me just pull that up for you. Our market breadth indicators. Let me just pull those out quickly. So let's see. Market breadth percentage of stocks. So let me just switch over to S&P here. As you can see on the S&P, stocks above there. What is this? Oh, excuse me. Stocks above their 50-day. So we're starting with the stocks above their 50-day. And as you can see, we're reaching a very deep extreme. We reached 7%. Usually, sometimes we get these little divergences that form in price before the bottom. Sometimes you get it right at the bottom, right there, like we did right there. Here, we got across. No divergence, but we formed a bottom. So we are at extremes, and we are looking for a major bottom to develop, in my opinion. If we come up here and get a nice little dip and get a nice little divergence, man, that's a big buying signal for me here on the stocks above their 50-day moving average. If I just check out the stocks above their 20-day moving average, sort of the same thing. We reach very deep extremes here, and we're kind of recycling back up. Do we come back down and form a divergence, or do we just keep going here and put in the extreme as the bottom? That is the question everybody, is trying to answer, and we won't know until the market shows us. So just continue being patient here. We've been patient throughout this entire decline, really waiting for our opportunity, because I think that once we do get it, we'll be able to, go and chill somewhere, do whatever you got to do for a few months here, maybe into next year around like February or March. So it is a pretty long term. It is a swing buying opportunity in my opinion, and I am looking for a bottom to form around these levels. Once again, the 3 drives on S&P, if that happens, and then dropping down to this lower trend line on the Nasdaq.